Hey guys, Jared Wesley here of Live Traders and back for another weekly trading lesson. Recently, guys, I've been getting a ton of emails, a ton of comments on YouTube about a very particular specific topic that honestly I thought more people knew about. Okay, as many of you guys know, I used to be a buy-side institutional trader on Wall Street. I've been trading for 15-20 years now for myself as well, and the term shorting or short sale or shorting the market is a term that I just assumed that everybody knew, particularly after that big Hollywood movie called The Big Short, which was, I don't know, some 3, 4, 5 years ago, give or take now. So I just assumed that everybody knew what shorting was. And when I made videos or I showed slides with stocks going lower, that you all knew how I was actually making money. So one of the comments that I frequently get is that, Jared, the stock went from $170 down to $165 and you made money. How did you make money with the stock dropping like that? Some people actually went as far as to say that I was fake or not being honest or real because there's no way anybody could make money with a stock dropping. Okay, and I'm forced to continually reconfirm that shorting is something, many of you probably don't know this, but shorting the market has actually, the term has actually been around since the 1600s in the East India Trading Company. I didn't even know that. I had to look it up. Okay, shorting as we know it today likely started in the early 1800s, 1822, with a gentleman called Jacob Little. Okay, so my point I'm simply making without giving you a full-blown history lesson is that the term shorting, particularly as it relates to the stock market, has been around for almost 200 years. Now, the term shorting has been around for probably 400 plus years, but as we know it, like I said, for a couple hundred years now. Okay, so professionals on Wall Street, money managers, hedge fund managers, everybody on Wall Street knows what the term shorting means. And many of you listening or watching this video also know what the term shorting means. But there's an unbelievable segment of people out there that don't know what this means. The basic point here, guys, is you profit from a security, in this case stocks, because that's what I trade, going lower. Okay, I'm going to explain it here in just a moment. For those of you that were just a little bit too lazy to look it up for yourselves, if you want to look up short or short sale or shorting on Wikipedia, they have some great information on it. If you want to Google the term shorting, Investopedia has a lot of information. I will read the definition here shortly, momentarily, and then I will have somebody from The Big Short mention it or at least explain it in about 5 seconds. All right, I'm also going to go over a few slides. Also, I'm going to show you some of the short trades that I've taken recently, including today and yesterday. Now, for those of you that don't know, the background looks a little bit different, doesn't it? The reason for this is I'm in Tokyo, Japan right now, guys. So I have my laptop right here, as you can see. I also have a portable monitor behind me. Unfortunately, my little 15.5-inch Asus Super Slim Portable broke, so I have to deal with this. I had to go to a secondhand store and get it for like 25 bucks. But nonetheless, guys, I talk a lot about trading and how difficult trading is, how challenging trading is, how hard trading is. Trading is also a wonderful business because you get to do this. You get to travel with a laptop, and even if your external monitor breaks, you can go to a secondhand store and buy one for 30 bucks. You can't do that in a lot of other businesses, guys, as long as you have an internet connection. So I'm sitting here on the 21st floor in Setagaya, Tokyo. It's beautiful, and you can do these things too, but it takes a lot of hard work first. You got to cut your teeth first. So, guys, let's dig in here. I want to talk a little bit more about shorting. This is not going to be a long video, and for some of you, it might be a little bit more on the boring side, only because you know what shorting is and you use it to your advantage every day. But for those of you that don't know what shorting is, let's dig in. So, Investopedia, guys, I'll put this up on the screen so you guys can see this. What is short selling? Okay. Short selling is an investment or trading strategy that speculates on the decline in a stock or other security's price. It is an advanced strategy that should only be undertaken by experienced traders and investors. I'm going to skip the second paragraph. In short selling, a position is opened by borrowing shares of a stock or other asset that the investor believes will decrease in value by a set future date, the expiration date. The investor then sells these borrowed shares to buyers willing to pay the market price. Before the borrowed shares must be returned, the trader is betting that the price will continue to decline and they can repurchase them at a lower cost. Okay, the risk of loss on a short sale is theoretically unlimited since the price of an asset can climb technically to infinity. That is Investopedia, okay? What is short selling? Now, another quick, and I'm not going to read the whole article. I'll put this up on the screen too. How short selling works, okay? To open a short position, a trader must have a margin account and will usually have to pay interest on the value of the borrowed shares. Now, I'll be honest, I don't pay any interest on TradeStation for almost every stock I try to short. It's 0% interest. Okay, you must have a margin account to do this. I'll repeat, you must have a margin account to do this. Okay, so to close a short position, a trader buys the shares back on the market, hopefully at a price less than what they borrowed them from, and returns them to the lender or broker. Traders must account for any interest charged by the broker or commissions charged on the trade. Yes, we all pay commissions, but we don't all pay interest on these. The process of locating shares that can be borrowed and returning them at the end of the trade are handled behind the scenes by the broker. So guys, you're not really doing anything other than you normally would be doing if you bought a stock. You're just doing the exact opposite. So where you would buy a stock, you're actually just shorting a stock. And where you would sell a stock for a loss, you're actually covering a stock. So you're really just flipping the trade. Imagine you just turn something upside down. That's really all you're doing, guys. Okay? So shorting has been around for a very long time. Let's have somebody else here. I think you guys will like who this may be. You guys know Margot Robbie. She's going to explain it for you in about a 5 or 10 second clip from The Big Short. So take a minute and check this out.
We're actually just mostly full of shit. So now he's going to short the bonds, which means to bet against. Got it? Okay. Now fuck off.
Guys, if that's what shorting's all about, you just sign me up, okay? But on a serious note, guys, shorting can be a very dangerous thing, particularly if you try to do it without a stop loss. As you guys know here at Live Traders, we never ever take a trade that doesn't have a clearly defined entry, target, and stop loss. And we never, ever, ever risk more than 1% of our account on a trade. Brand new traders should never be risking more than $5 or $10 per trade. I'm tired of all these gurus telling you that they turned $500 into $150,000 in 43 days. Bullshit is all I have to say, okay? I've seen the places they live in and the cars they drive and the mortgages they have, and it's a bunch of garbage, okay? My point I'm making is shorting, even going long, can be a very dangerous game. But if you have a stop loss using a stop market order, it's not a big deal. So what I want to put on the screen right now, guys, is Facebook. This is a stock I shorted in June, okay? And I'm just going to go over it real briefly. It's a 3-bar play, which many of you know me for my 3-bar play and 4-bar play, okay? So let's take a look at Facebook. So if we take a look at Facebook, guys, this is a stock that on the 2-minute chart, all right, has a really nice wide range bar to start the day, then a narrow range bar, and then it drops. So the entry is $173.20 short. Okay, short. You're going to borrow these shares short at $173.20. Your protective stop loss will be $174.00. So you have an 80-cent stop loss here. What this simply means is you're going to enter the position on the short side at 173.20, and if you're wrong, which means if the stock goes higher, you will get stopped out at $174 for a loss. Okay, in this case, that loss for me would be about $300, $320 in this case, 400 shares, give or take. Okay. If it goes lower, however, the lower it goes, the more money you will make. And you can see that on the left-hand side where you can see $600, $605, $609, $637. The lower this thing goes, the more money I make off of it because I want the stock to go down. So I want you to imagine when you learn the 3-bar play, most of you are very, very familiar by going long on 3-bar plays, right? That's the common thing. Everybody, oh, I know how to, I know a 3-bar play, et cetera, and so forth. And if I bring up a stock like Netflix, right? I'll bring Netflix up for a second. All right. You have a 1 minute 3-bar play here. That's long. Everybody seems to get this. Buy a stock at 345. Your stop loss is 343.25. So you have $1.75. And as the stock climbs higher up to 348, you're making more money. And everybody understands this. But you can do the exact same thing in the opposite direction. Okay? So imagine if you took this chart, the 1 minute chart on Netflix, and just literally flipped it upside down. That's all you're doing. I'm trying to simplify it for you so that you guys can better understand. So then we go back, right? We go back to the Facebook slide, okay? And now that's exactly what Netflix was, but upside down, okay? So it's a very simple concept, all right? I know many of you are thinking, how in the world do you make money when something goes lower? But guys, that's what makes the market move up and down. Buyers, short sellers, okay? Speculation is what makes the market go up and down. So this is not going to be a very long video. I'm going to put on a couple of my live trades, one from today. We actually didn't make much money off of it, but you'll at least see me placing the order short. So you can see where I place the order, okay? And you'll see on the slide here, if you look in the red, right, that's where I would be placing my order short. Okay, if I wanted to buy a stock, I'd be placing my order in the blue, long. So instead of just placing my order at, in the blue area, I place my order in the red area and hope the stock goes lower. I know to some of you go, that doesn't make any sense. I'm going to show you a live trade here from today and yesterday, because all I did yesterday and today were short stocks. And you'll see here a little bit how this works, okay? So again, not the most scientific way to explain things, because you don't really need to understand behind the scenes how shorting works per se. You basically understand how to go long on a stock, right? You don't ask anybody, well, how do you go long on a stock? You buy the stock. Everybody understands that. Well, shorting a stock is the same as buying the stock. You're just doing the exact opposite thing. Okay, so understand it in that term. Your broker will do all of the work for you. The only thing you occasionally have to do is locate a short play occasionally if it's hard to borrow. I don't even want to get into hard to borrow at the moment. We have uptick rules, hard to borrow, all that stuff. But this is just a very basic video on short selling, because most of you just simply don't understand that you can make money with a stock going lower. Okay, and you can, and you'll do it the same way you go long. Now, why is this important? This is the $64,000 question. Why is this topic important? It's important because it allows you to profit from the market no matter what is happening. Okay? See, a lot of people think, and I get this all the time from people, and I'm sure for those of you out there that are seasoned traders, you get this all the time also. When the market's up like 200-300 points on the Dow, everyone, they call you up or you see them at the coffee shop and like, oh, you must have had a good day today, didn't you? Why? Oh, because the market was up like 300 points. Didn't you see it? I'm like, I did. But when the market gets hammered, and I got this all the time in 2008, 2009, 2010, more 2008 and 9, they're like, are you okay, Jared? Is everything okay? Like, they're almost trying to console you. Like, are you okay? And I'm sitting there, what do you mean? Well, the market's down 40% on the NASDAQ. Are you okay? I'm fine. One, because we always have an entry, a target, and a stop loss. And two, because we can short the market and make just as much money with the market going lower as we can the market going higher. In fact, the two dominant emotions in the market, fear and greed, fear is a far more powerful emotion than greed. Okay? You look both ways when you cross the street every time because of fear. All right? Fear is a very powerful emotion, and that's what we are exploiting when we short a stock. We are exploiting fear, okay? So you can make money with a stock going up. You can make money with a stock going down. The important point to understand here is that because you can do that, you can profit in any market, a sideways market, a bullish market, a bearish market, etc. All right? So let's get to that, guys. It's only going to be about 5 or 6 more minutes long. All right, I want to show you exactly what I'm doing to short a stock. I will be back this weekend from Japan. All right, I'm on vacation here. My family comes here for 2 months every summer because my wife's Japanese. My kids go to school here. I usually come for a couple weeks or so. All right, so we're at our place here in Tokyo. I will be home this weekend. So if taken some time to reply to your emails and your YouTube comments, I apologize. It's because I'm on vacation. Also, for those of you who want a 30-day, $1 trial, $1, 30 days in the chat room, $1, 30 days in the chat room, email info, I-N-F-O, @livetraders.com. Jared Wesley, Live Traders. Check out the rest of the video. All right, guys. So Roku here, let's short this at 88.04 here, $88 by $89. So you can see, guys, I'm putting my order on the right-hand side of the screen in the red section because we're hoping Roku will go lower here. We're not looking for Roku to go higher. We're looking for it to go lower. So I like this little 2-minute 3-bar play that is forming on Roku. You can see my order is in at 88.03. All right, it says SS, which means sell short. SS means sell short, guys. All right, so we're about to get filled on this thing. Okay, I'm looking at WDC as well. Look at the 2-minute 3-bar play, but then unfortunately it triggered early, so no trade on WDC. ADP, guys, take a look at the 2-minute chart here. Beautiful, wide bar, narrow bar. We're going to look for a 3-bar play on this, guys. The entry will be around that 150.50 area. This stop will be like 160.50, give or take. It'll be about $1 stop, maybe an 80-cent stop. All right, so I'm going to put an order in for this guy. See it right here on the right-hand side in red. Notice in red, okay? And it says SS. I do the same thing you would do if you were going long. The only difference is you put the order in on the right-hand side instead of put the order in the blue, which means to buy it long, okay? And then you see the stock here, guys, with a little bit of a spread. But notice the 2-minute 3-bar play has not triggered yet. We still need a couple more minutes here, another minute or so for this to trigger. But notice my order. It's at 159.56 in red. It's on the right-hand side there. I place it in red. See the spread, 20, 30-cent spread. We have to be cautious here because the spread on ADP is pretty big. One of my concerns is it's not below the pre-market low. Like the gap here, you can see the gap on the daily chart is beautiful. But then we go to the 5-minute pre-market chart, and we got to get under 158.50. So that's a little bit of a concern, okay? So now we take a look at the ADP, guys, right? Wide bar, narrow bar. We're almost there. It is. See the 1-minute and the 2-minute, guys? Wide bar, narrow bar, and it hasn't triggered yet. We're going to get triggered in here shortly. It hasn't triggered, but now I have a 3-bar play on the 2-minute chart, okay? There's the Roku, guys, also forming a 3-bar play on the 2-minute chart. See my order there, right there? I just moved it up a little bit. I'm going to try to get in a little bit earlier. Instead of 88.03, I want to get into 88.05. Why do I do this? Because I don't want to get slippage. I want to get a good fill on this thing, okay? So right here, we're close. See on Roku, guys, we're only about 20 cents, 15 cents from getting filled. Okay, the spread on this stock is wide. So this is not something I would advise for new beginning traders to trade Roku because it's a whippy, spready stock. But you can see the 3-bar play forming on the 2-minute chart. Okay, $88 is the area in which we'd like to enter, and 89 is our stop loss. See it? We're just about there, guys. Okay, there, we're in. We just got filled right there. Got filled at 87.95. And see it goes green when the stock drops? See how it's going green when the stock drops? That means we're shorting the stock. We're making money with this stock going lower. Okay, now it's in the red. So every time the stock bounces, it goes into the red, which means I'm losing money. See it? Right now we're about break even, give or take. Okay, about break even. Okay, but notice when it goes up, you see the P&L go red. When it goes down, you see the P&L go green because I'm betting short here. I'm betting against Roku. I'm betting that Roku will go lower today. Okay, now I don't like that 5-minute bottoming tail bar on the 5-minute, but I still like the 2-minute chart. Okay, there's my stop loss. Notice my stop loss right there. Okay, so we're just sitting here at break even, guys. All right, hanging out. It's going down a little bit lower, up like $100 or so, but you can see how spready and whippy this is. These are not the kind of trades I would recommend for brand new traders because Roku is very spready and whippy. But anyway, there's the pre-market chart, and you can see on the pre-market why I like Roku so much. See 88.50 on the pre-market? See how beautiful that is if we break it? All right, now see that order, guys, I'm putting in right here? It just says buy. It says buy to cover. and I just covered 100 shares. Okay, now there we go. A little bit of movement there. Got 150 bucks. A little bit of movement. We need a big target on Roku, guys. But you can see right here, again, it's going lower, and the lower it goes, the more green I get. Now, right there, I'm clicking right here, guys. Okay, what am I doing there? I'm looking to buy to cover, which means buy is actually exiting the trade. I'm going to repeat that. If I click on the blue area, I'm buying to exit, not buying to enter. And this is what confuses people right there, right there. Okay, I just bought to exit. Why? Because I want the stock to go lower. So all you do, right, this is my stop loss. That's my target right there. See, I'm dragging my target down right here. Okay, 86.50 or so. Keep going down, keep going down. 86.20. This is going to be the target area right around 86.05, give or take. Okay, so I want the stock to drop. And if it drops, you see the money I'm going to make. See my stop loss now? Right there at 88.50. Okay, so if I'm wrong, I'm going to lose like 68 bucks on this. If I'm right, I'm going to make like 400. Okay? So again, you can see Roku's just chopping around at break even. Okay, and here we're back to our ADP. ADP finally triggered. Remember, we talked about this one a few minutes ago. Notice when it goes up, it goes red. When it goes down, it goes green, because I'm betting against the market. I want this stock to go lower. I want this stock to go lower. Okay, so if I want to get out of it, I have to click on the blue area, right? So think about this. Most of you guys, when you click the buy area, you're going long. Well, if you want to short a stock, you just click in the sell area. That's it. It's that simple. It really is that simple. You can even see on my platform where it says place order, it says in blue, buy market, and then in red, it says short market. That's it. It's that simple. A lot of you guys think shorting is a really difficult, convoluted thing to do. It's not, right? It's not at all, okay? And here goes ADP dropping a little bit here, getting a little bit of follow through on ADP. My point I'm making is you think that you have to call your broker up and locate the shares and make some convoluted transaction. You don't. You don't do anything different than buying, except you're on the opposite side. So instead of buying the stock, you'll hit sell short. Same button, just different color. The buy button is blue and the sell short button is red. Okay? And when you want to get out, you do the opposite. When you want to get out of a long position, you sell the position. When you want to get out of a short position, you buy to cover. Buy to cover. Okay, it says cover there in blue. All right, that's all you do, guys. I'm just betting on the stock going lower. All right, you don't need to necessarily understand all the minutia here. Okay, it's one of those things that, in my opinion, is something surprising that most people don't know about. Right now, selling short here, guys, on Selg, CELG. See it 95.02. I placed my order. It says SS. Sell short, 95.02. Okay, so I like it. If it breaks under this 95 area, I like it. There is a little pre-market support at $94, which I don't like, but you know, we'll see. Right now, we're coming down here. We're about ready to get triggered on this thing. Okay, we're at 95.13. I'm putting it a little bit above 95 because I don't want to take too much slippage, and boom, we're about to be in this thing. There we go. We're in it. Okay, 95.01, good fill. All right, not a good break, and there's my stop loss. I'm raising my stop loss to 95.80. Okay, stock's going against me a little bit. I want this thing to go lower, but it didn't really break 95 in a very good way. Okay, didn't break 95 in a good way. So right now on this trade, I'm risking about 450 bucks, and I'm hoping to make about 750, give or take. But you can see it triggered me in here, all right, and it's going lower, but it's taken a long time. Right? It's taking a long time. And a lot of that is because of the pre-market support, right? You see that pre-market support at $94. So, you know, guys, this is me in real time shorting stocks, okay? I mean, I'm showing you in real time. You can see my account number up there. You can see everything up there. You can see my fills, Selg fill right there. So I'm going to cover a little bit of the Selg here, just a little bit. I have 600 shares of it right now, but you know, things aren't following through the way I want them to. They're kind of hanging out. Normally, a stock like Selg, a $95 stock, will just drop. Right there, I just covered 100 shares. I have 500 left. Okay, I'm going to cover a little bit more down in the 1-to-1 range. Okay, and you can see right now, for a moment there, I don't know if you guys saw that, but I had about $700 or $800 open P&L. And unfortunately, this day ended up only being about a $600 or $700 day. So you can see here, Shop, beautiful. Look at this 3-bar play on Shop, guys, on the 5-minute. Wide bar, narrow bar, drop. And look at that. That thing dropped $6 on a $2 stop, guys, and it did it in less than 5 minutes. Take a look at this. $320, wide bar, narrow bar with a topping tail. I'd like the topping tail to be a little smaller. I'm taking a little picture of it here real quick. Boom. And look at that. $6 move on this. Those 3-bar plays, guys, are money. Long, short, it doesn't matter, guys. Why is it important that we can short stocks? Because you want to be able to make money when the market goes lower, right? You want to be able to make money when the market goes lower. So you can see here on Facebook, you can see here on ADP, you can see here on Celgene, Shopify. I didn't catch Shopify. It happened too quick. On this particular day, guys, Netflix was long and Celg was short. So I'm going long on one trade and short on another trade. And they're both making money. How sweet is that? That you can make money long and short in the market. Okay. So again, you can see the Shopify, beautiful trade. Take a picture of it because that's textbook stuff. Like that's exactly the type of 3-bar play you want to be taking. When it broke that 320 mark, this thing just tanked. Very spready and very whippy, nonetheless. But anyway, guys, I'm going to go back to Celg here in just a second. We're going to take a look at Celg. It's doing a little bit better now, but you know, still struggling. I would expect more from this quicker. All right, it's not that all good trades work immediately, but for my style of trading, most of these trades work very, very quickly. So when they don't work quickly, I start lowering my stop. I start tightening things up. See my stop loss right now is at break even basically. Right there at 95.07, I just moved my stop to 95.07. Okay, now Celg is dropping a little bit more. I'm going to cover a little bit more here soon. Okay, normally I wouldn't do this, but the market's been really, really choppy lately. So I covered a little bit early. Okay, normally I'd hold my 600 shares for, you know, about $1.50 move. But Celg is testing my patience. So around the 60, 70 cent mark, I covered a couple hundred shares. All I'm doing there is mitigating risk. I'm breaking my plan a little bit, which you shouldn't do. Okay, but mitigating a little bit of risk. And I'm being honest about it. A lot of people like to lie to themselves. The difference between an experienced trader and an inexperienced trader is when I break my plan, I don't break it by much. I break it by a little bit. Inexperienced traders break their plan by a lot or don't take a stop loss. Do something suicidal. Okay, if I take a couple hundred shares off 20 cents early, I cost myself $50 on a $700 trade. That's not the end of the world. It's less than 10%. But if you're taking all your shares off early, that's a problem. Okay, so you can see Celg, guys, we really needed to break $94. The lower it goes, the more money we make. We're up almost 400 on it. Okay, and if we get under the $94 area, I'm confident, you know, we can probably get our target on this thing. But it's just a slow mover today, which is, again, for Celg, highly unusual. This is usually a quick moving stock. It's a stock I like to trade. It's not overly expensive at $90. The other thing that's important, guys, I mentioned earlier, is to short these stocks, you have to have a margin account. You have to, right? My account is leveraged 4-to-1. I'm obviously above the pattern day trading rule. If you're international, you don't have that pattern day trading rule, but in the United States, you do. So you need at least 25,000 in your account, or you only get 3 trades per week. All right, there we go on the Celg, guys, up about 400 and some bucks. It's finally going lower, finally doing what we want it to do. So anyway, guys, Celg doesn't quite get to full target, but look, this is shorting in real time live. I'm making money with stocks going lower. Making money while stocks going lower, guys. It's not rocket science, and you can do it too. I hope you enjoyed that video, guys. Check out my...
Got it? Okay. Now fuck off.
To get more great educational content, subscribe to the Live Traders YouTube channel. This way you'll get email alerts every time I upload a new video.